corporate fraud in general.
Yeah, I was gonna say just to keep track of money to make sure no one's taking any.
Do we know how much fraud occurs in all types of organizations around the world? About 5% of revenues is lost due to fraud. According to the Association of Certified Fraud Examiners, that translates to $5 trillion per year around the world. These are estimates. They have their methodology of estimating it, but that is the extent to which fraud occurs. And in terms of IRS fraud, about $300 billion is lost every year in the US due to tax evasion. So what is fraud? Fraud is an intentional act. There is no intent, there is no fraud. Or it is what is also, in terms of omission, that is what is called willful misrepresentation. So there's a victim, there's a perpetrator. The victim suffers a loss, and the perpetrator has a gain. So that is what this is all about. So based on the extent of fraud that we know occurs, the next question is, why do people commit fraud? Right? And that is what we will look at. We will look at the psychological and behavioral patterns of people who cheat or commit fraud. And based on that, because most of the fraud is concealed, how do organizations detect it? And in terms of detection, it is better to catch it before it comes out in the open, and there are a lot of sanctions and other types of penalties that organizations need to pay. So these two questions I want you to think about as we go through these slides. College admission scandal. It is very close to all of us as students, as academics, as well as college administrators. So it was also called Operation Varsity Blues. And the person here is the main perpetrator of the fraud. And what he did, his name is William Singer. And he basically did three types of schemes. One is he assisted students in cheating on college admission exams. And how did he do that? It's reported that it largely occurred through three different schemes. First was he allowed, he went to psychologists who were able to give false learning disabilities to certain students. And how did that help students? It helped them to select a test center of their choice, as well as it helped them to get extra time in order to answer this question. As students, we always look at, can we have that extra 15 minutes, which will make such a difference in, what we score in the exam. So that was one of the things that he did. And the second thing was he made these false travel plans because he had these connections to these test centers, which he controlled. And then what would happen is other people can come and take the test on behalf of students. So that was the second thing that he did. And so what happened there was that other test takers, especially, there was one person from Harvard who would come and take tests on behalf of students. And that would happen because traditionally when students take their SATs and ACT tests, it happens in their high schools. So what happens is the proctors can recognize the students. So you want to take them away to other centers where folks will not be able to recognize the proctors. That was one of the things he did. The second thing he did was fabrication of sports credentials, because college administrators and athletic directors and college coaches have some say in the admission of students who are talented in sports. So what did he do? He bribed those officials, and in order to help students with their applications, he even photoshopped some of their photographs on photographs of other sports people, and they were helped to get in there. And how did he, conceal all this fraud? He started a charitable foundation, and everything was done through the charitable foundation, and so that's how it was not caught for a long period of time. And how did it come out? How did it get caught? It so happened that one of the parents of one of the kids happened to be investigated by the SEC on a totally unrelated matter. And when he is being investigated by the SEC, he offers up to give information about this scandal in exchange for lighter punishment. That is how this thing come about. So at the end of my talk, we will come back and look at what type of behavioral patterns would we have recognized, if we were on the university side. How could we have caught, knowing these were the patterns that folks used in order to get into colleges? So we will wait for that till the end. And the next one is the Bernie Madoff scam. It is the biggest individual scam that happened, in the last 10 years or so. Before that, it was Enron, but that was most of you must have been really young to remember Enron, and we teach this in forensic accounting classes as to what Enron did and all that. But here, let us look at something more recent and about Bernie Madoff. And this is a trailer of the movie The Wizard of Lies. Those of you who have not seen it, I suggest that you see it to know more about what happened. This is Robert De Niro and Michelle Pfeiffer played Bernie Madoff and his wife. So it's a 2-minute or so. I guess there are issues with technology here, but that's okay. Let us talk about what the scheme was. It was a Ponzi scheme, and what is a Ponzi scheme? It is an investment type of scheme where you take money from earlier investors, and the profits you pay them by taking money from later investors. So you have the thing going on. And what he did was he never invested the money, and the strategy, his investment strategy was he said that he was able to beat the market for many, many years in a row, and he did it for over 17, 18 years before he got caught. And to the extent that the extent of the fraud was $50 billion, and he was convicted, and he is in jail in North Carolina for 150 years, which is way past his life. And the thing there is, why did people not catch what he did? And Malcolm Gladwell explains this very well in his book Talking to Strangers. He says that we are all, as human beings, very good. We trust people, and because we trust people, and people who deceive, because they are less than 1% of the time, we are not very good at recognizing deceit. So we give them the benefit of the doubt. And he says, he calls this, and in academia this is called truth default theory. we go back to, we default back to truth, and because these people have trusted us so much. And there were, in the 90s, there were, for example, there was it's a very famous hedge fund called Renaissance Technologies, which use computer models. They're all PhDs in physics and economics and all that. And they use these computer models to trade. And they had money invested in the Bernie Madoff fund. And three of their partners looked at the fund and they said, this does not make sense. Any sort of model cannot predict what was going on. But they said, they thought to themselves, here was a person who was the chairman of the New York Stock Exchange, and he was trusted by everybody. And so what they said was, okay, though it does not make sense, we will take back our, not our entire investments in the fund. So they took back a lot of their investments on the fund, but they left some money in there, just in case what he has done happens to be true. Again, the default was, finance is a highly regulated industry. We have the SEC, FINRA, OTC, the Treasury Department. You have all these regulators looking at it, and if they have not found them out, then who are we? So it was this default to the truth. However, there was one whistleblower, Harry Markopolos. He was working in a competitor of Bernie Madoff's, and his bosses had told him, go and replicate his trading strategy. And he tried everything, and he couldn't figure it out. And what he said in his testimony is, if you compare it to baseball, his trading was so good that he would be batting at 960, which is not possible over long periods of time. So he goes to the SEC back in 2000, and over the years he goes to the SEC and presents it to them. And they never catch it. And so when the whole thing came out, and he goes and testifies to the SEC, he says, I gift wrapped it for you. I gave you these 20 or so red flags in terms of what was going on, but you could not find it. So that is another thing that he looks at. Now, it is in terms of behavioral or psychology. In 1940, there was a professor called Donald Cressy. He was from Indiana University, and he was the first person who came out with what are the behavioral factors that affect people who commit fraud. So he went and, as part of his PhD in criminology, he goes and interviews about 200 embezzlers who were in jail, and he finds out that there are three common, and all three factors must be present in order for somebody to commit fraud. And first one is pressure or incentive. There must be an incentive to commit fraud, and we will look at in the next slide as to what some of those common behavioral factors are. Then there has to be an opportunity. Opportunity means that for example, there are not many internal controls within a firm, and so the opportunities to cheat or to commit fraud increases. So there has to be opportunity for them to do that. And the third one is rationalizing. Rationalizing is, and the most common rationalizing is, if you're a businessman, okay, I'm borrowing money from the firm. I will pay it back later. Or some employees feeling that, the company is doing very well, but they're not paying us enough. So we are rationalizing that we would commit fraud. And all this happens before you commit the fraud. Because after committing the fraud is when, you realize what you have done wrong. But before committing the fraud, a lot of these rationalizations occur. So these are the behavioral red flags which has come out from the Association of Certified Fraud Examiners. They've been doing this study once every 2 years for the last 22 years, from 1996 onwards. And if you look at the top two as to what those incentives of behavioral red flags are, living beyond one's means. And the second one is financial difficulties. So these are, the top two, the incentives or the pressures that drives people to commit fraud. Why are people dishonest? Or why do people cheat? Or why do people commit fraud? It is the classic theory of crime and punishment. It was first postulated by Gary Becker in 1968. He is an economist, and he went on to win the Nobel Prize many years later. And what it says is that whenever somebody is committing fraud, they have this calculus going on in their minds, and it is based on three things. It is they weight the gains that they will be getting from it. Then they will also weigh the probability of getting caught, and also the severity of the punishment if they were to get caught. So these were this calculus goes on when somebody commits a crime. And for example, one of the things that the IRS fraud is so much is over the years, the number of IRS agents who investigate any tax evasions has really gone down. So there are not many people looking at people's returns. So it is less than 1% that even somebody is asked to in their lifetimes to being audited by the IRS. So that is that relates to the probability of getting caught. Then we move on to Dan Ariely. Dan Ariely is a behavioral scientist, and he's written many books, one of it being Predictably Irrational. And what he talks about there is that people are generally honest, and but however, given the chance to cheat, there will be limits as to what they will cheat, and but they will not. There will be limits, and then once they are reminded of honesty, of honest behavior, then they will reduce their of cheating. And what is this honest behavior that he talks about? He talks about moral standards. People have moral standards. So when they are looking at themselves in the mirror, they will always are connected to their self-concept or moral standards, and they will say, okay, if I cheat too much, that's not who I am. I'm a morally good person. So they will keep it within limits. So what does he do? He conducts a series of experiments, he and his colleagues. And these were students who were taking tests, and they were asked to do simple tasks, and they were given 5 minutes to do it. And in the control group, everybody answered their questions, and on average, people answered about 4 to 5 questions. And then they would get 10 cents to $5 in terms of reward. So that was their control group. And the average number of questions that these students got right was 5 or 4, between 4 and 5. Then in the second experiment, they give them some opportunities to cheat, which is that you take the test, put your answer sheet in your bag, just give the questions in your bag, and give the answer sheet to the proctor, but tell the proctor as to how much you think that the answers are right. And based on that, the proctor would not check. He would take the answer test and give them the money. Some opportunity to cheat. How much do you think the average went up to? From, let's say, 4 or 5. How much people, they had some opportunities to cheat, and this was self-disclosure. 7, about 7 to 8. People said they got 7 to 8. But they were given 20 questions. people had the opportunity to say 20, right? And they could walk away with that money. But that's where he says there are limits to what people would cheat. And in the third condition, it was like total opportunity to cheat. The proctor was not even in the building. He or she was in the few buildings apart. The students take the test, put it in a shredder, but actually the shredder had only the corners of the shredder working. And then they have to walk 2 buildings or a building and tell them as to what, how many did they do. Interestingly enough, the second and third experiment came with the same results, even though having the proctor far away from where you are, they cheated the same. Then they wanted to find out as to how we can stop this cheating. So they did 2 studies. In the next set of students, they made the students, one set of students write, how many books have you read in the last, 2 months? And another set of students, they said, tell us about the 10 Commandments. And write it about the 10 Commandments. And then they were given the test. Because, now they are primed with their, about their moral standards, cheating disappeared. Cheating disappeared. So what he says is, and this has been done, interestingly enough, this study has been done many, many times. Many religions will not even follow Christianity, and even atheists, it worked. That when they were primed with this moral standards, that they cheat less. So there is this fourth factor to the theory of crime and punishment that he came about, and he said that there's this equilibrium. We try to maintain this equilibrium between the gains from cheating and from these magnitude of dishonesty. So this is going again to the psychology of people who cheat. How are frauds detected? The number one method of detection of fraud is tips or whistleblowers. And whistleblowers accounts for most of how these things are detected. And if you're working in organizations, they have hotlines and whistleblower hotlines and all that. But generally, it is seen that for various reasons, very few people tend to be whistleblowers because they don't, there is some fear of repercussions from their employer, though it is legally not allowed, but they don't want to rock the boat and in their lives and all that. So in terms of whistleblower, the moral of the story is many people would see something going wrong within their organizations, but they would prefer to remain quiet. So initially, that is what is the main reason as to how fraud is detected. Now, based on a fraud examination, we looked at all these individual factors and what organizations could do. Now we come to forensic accounting. And forensic accounting is it's a subspecialty within accounting, and accountants want to feel important, and so they came up with this word forensic. Like we are investigators in Law and Order or something. And at the end of the day, forensic just means to be admissible in court. Here I want to talk about, I told you about the ACFE, and what are the 3 types of fraud, what they call occupational fraud. This is all fraud by employees and owners against organizations. And there are 3 main types of fraud. They categorize it under 3 main types of fraud. The most common, but the amount dollar value being less, is asset misappropriation or stealing. And in terms of stealing, the most common method of stealing that is done by employees is to travel reimbursements. Either they pad the expenses that they do or they make up expenses. And in the US, the IRS requires receipts only for $25 or more. So in terms of some of those expenses that people charge, it is below $25. So in terms of that is the most common type of fraud, but the magnitude is less. And in the middle is corruption. Corruption is, paying bribes. In the U.S., there is a law which was passed post-Watergate in the 70s, which basically prohibits companies and other organizations and individuals from paying bribes to foreign government officials in order to obtain business. That is one type of corruption. And the third one is financial statement fraud. Financial statement fraud happens the least, but it is the most in terms of magnitude. And many companies such as Enron and all that went bankrupt because they did such massive financial statement fraud. So in terms of, as forensic accountants, we identify, we analyze, we gather all this information so that it can be presented in court. That's why the technical meaning of forensic accountants. But there is another thing forensic accountants also do, and that is calculation of economic damages, which means that, for example, there's a patent violation. Many years ago, Apple and Samsung were in this battle about each violating each other's patents. And here, what happens is some economist or a forensic accountant becomes an expert representing both parties as to what the damages suffered by each of those two parties is in those damages. And since I brought up the case, it was initially decided that Samsung had to pay Apple $1 billion. This was back in 2014. And then reading the news, that thing has been in court and appeals and all that. Now I think both parties have settled it for less than $300 million. But that is another area where civil type of matters that forensic accountants would get involved in. How did this field even come into being? It started in the 90s, where the lawyers would reach out to accounting firms, and the accounting firms were auditors, and they wanted some of them to become, to come and testify in court, do this analysis and testify in court. Over the period of time, it became a specialty in itself, so that all the big accounting firms is where it started. They had their own forensic or dispute or whatever services they were. The next inflection point came in 2001 post Enron, and that is when I joined forensic accounting in Deloitte and Touche, and the phones would ring off the hook in terms of all types of, because there was not only Enron, WorldCom, Adelphia, all these big things happened back in the day, and forensic accountants were in demand. The next thing happened was in post the financial crisis in 2008. And what was happening was when the US government, either the Department of Justice or the Securities and Exchange Commission, when they were settling with companies, they were giving them credit for good behavior in terms of lessening fines and all that. And what they looked for is if the companies had effective compliance programs in place, because they should have caught it. You can't catch every single misconduct that is done by firms, but you should be able to at least catch. Should be widespread that you don't catch it. And so what happened is, because companies have to prove that, a lot of companies started hiring these forensic accountants in-house, because the way forensic accountants got paid was by the hour before that, and it was more expensive to pay an outside firm than to employ themselves. So this continues to be, this shift about of working in companies has given a lot of opportunities for accountants to work there. The next few slides is I'm just going to go through as to how those of you who are interested in forensic accounting, and if we do offer forensic accounting at FDU in the future, as to what your career opportunities are, what you need to do. In terms of the investigation team, we have there are the forensic accountants and computer specialists. Very important in terms of gathering the evidence, e-discovery, because one of the things we need to do is first is find the transaction which represents the payment of the bribe or the payment of the fraud or whatever. So you have to look at literally millions of transactions over various periods to identify those transactions. And the second thing is to prove intent. You have to look at all the communications that people go through. Emails, electronic discovery, and all that. So computer specialists are very important. And then the outside counsel, because companies and organizations have outside counsel in order to have an independent investigation. So forensic accountants work under the direction of these of the lawyers. So this is basically based on what we said. This is what forensic accountants do. And one of the other things that I also want to do is to do background checks. Background checks in terms of who, what, whether they are, they have a bad reputation and all that. And in my last job in the consulting world was at FTI Consulting, and colleagues of mine were working on the Bernie Madoff matter. And he had a lot of assets outside the US. They had to figure out where those assets were. So they had to put people on the ground, and they had on staff some folks like former FBI, CIA folks who have done this intelligence gathering and all that, and that is one of the things also that forensic accountants can do. So these are all the types of skills and capabilities. It's not only the accounting skills, the auditing skills, but also communication skills and report writing skills, because not only writing reports, but also being able to go and testify in court about various actions or whatever the damages calculations one has to do. So this is the career path for, we can work in professional service firms, and I already talked about public and private companies, regulatory agencies, and the government. If at any point in time you go on the FBI website, one of my students in the other campus came over and asked that he has applied for a job as an intern at the FBI as for a forensic accountant. The SEC, the enforcement division of the SEC, currently has interns for the summer, for next summer. And then the PCAOB, which was the Public Company Oversight Board, Public Accounting Oversight Board, they have inspections because they have to examine the audit working files of companies and all that. So there is a lot of other avenues other than the pure accounting and treasury functions and the controller functions that accountants can do. So these are some of the career path for forensic accountants. And in terms of the professional organizations, I've been mentioning about the ACFE. Those of you who are interested, it is to become a student member. It is $25, and it's till you decide to become a forensic accountant. By this, by paying the $25, you can get a lot of information about what goes on, how do you interview and interview suspects and all that. All those things are available on the website. The other one I would like to mention is the Certified in Financial Forensics. Earlier, till last year, you had to be a CPA before you took that designation. Now there has been now you don't need to be a CPA. if you were to decide to get a certified in financial forensics designation. Okay, so we go to the next slide, and that is where we will come back to what we said. What would we do in order to identify patterns in the college scam?
Said 2020, but I think maybe like you'd have to somehow screen like tips, like anonymous tips you get, or incentivize people to give tips.
The admission systems of all these colleges, right? There are students applying. It's all the admission systems, and they interview. They get all these other qualifications, scores. ACT scores, SAT scores, and all that. So, using that system, what sort of how will we identify the patterns?
Come on, some people.
Yeah.
Someone, say something.
Maybe like investigate outliers more.
Yeah. How would you investigate the outliers? What would be some of those outliers?
So people who have like really low SAT scores and GPA and are getting into like these top schools.
That is one way of looking at it. And on the same lines, let me add something. If you're a multiple test taker, why are you taking multiple tests? So that you can improve your scores. And you will improve by a little bit, but there will be, if you look at the average improvement and look for outliers, those students who took it a second time or a third time, and it's 2 standard deviations over the mean, the average improvement scores. That will show you some of the outliers.
Perhaps, you said not directly analyzing the students particularly, but you said that he was using a charitable organization in order to launder the money that he was using. So, maybe after something like this, there's more concentration. Charitable funds are supposed to give the perception of, it's a good thing to do, it's good for society or whatever. But maybe after this scandal, there was more concentration and auditing of financial statements for all the charitable organizations like that.
But if you were a university, imagine if you were administrator of the university and we had access only to the admission system. That is something which is going on because they use that money to bribe these officials.
Right.
And one of the things based on that is whether some of these people got onto these sports teams and they didn't have the talent. That Lori Loughlin's 2 daughters went to University of Southern California. And they paid $500,000 in order to get into the rowing team. But they had never been rowers in their lives. Right? So after they join the team, make sure that these people are showing up and performing based on what they were admitted for. Right? If you have that talent. Things like that. Those are some of the patterns that you could find.
So going back to the fraud triangle, you have to have opportunity, so you could look more closely at applicants from like richer backgrounds.
Very good. Richer backgrounds. And those are the ones who can, who can afford to pay and have their students, their children and all that, who would otherwise not qualify in order to get in there. Very good. Yeah.
I was going to say after the admission process, you test the students to see how they're matching up with their criteria from high school.
Yeah. And the other thing about this, these test taking and all that is to make sure that look at those folks who are going to these other test centers than where they are, the city they were located in. They were either being flown to California or somewhere in Houston. That's where the schools were. Why were they taking it, right? Things of that nature. All these things are, are left in there. These types of traces, the red flags, and that's what, as forensic accountants, that you learn. That investigative mindset as to how we should be able to catch all this. So. So these are all some of the things. You have answered most of them, and I won't go through this. Now, the last thing, which is that what we do as academics. Where does the research on corporate misconduct? Why do we study corporate misconduct? Because it signals information about the firm and its relationships that it has with all its stakeholders. And doing some of these bad acts could result in these trust relationships being broken, and it results in loss of revenues and even in the worst cases even license to do business, and it results in what is called a market penalty. How does the market value of a company fall first when these allegations of these various misconduct come into being? And it increases the cost of doing business for the firms. And it's corporate misconduct costs billions of dollars, and that is not something which is new news. That is sort of to be expected. But the surprise is for different types of misconduct that how does the market react. On one end, the most severe type of misconduct is financial restatement fraud. And researchers have found anywhere from 13 to 15% to 25%. In one day after those the allegation first came into being. And the reason for that high drop is because financial statement fraud is done by the management. It's the highest level of the company, and it can, the magnitude, like I said earlier, is so high that in studies it has been shown that 60% of the companies between 1992 and 2007, the first study which was done, that they went bankrupt. So it even affected their ability to stay. On the other hand, on the other extreme, when there is hardly any market penalty, come two types of misconduct. One is environmental violations. Another, is that my time is coming to an end? Or?
No.
Oh, no.
Okay. Environmental violations. Why the market doesn't react? Very minimally. It doesn't react as much as. Can somebody take a guess? Location, which is very true. It may have happened, at a particular location, and it may be harmed only those people in that particular location, but not all the other stakeholders of the firm. And the other one very close to that, a little above that, is product recalls. Product recalls are usually looked at as, there's some failures in quality control, and these things can be rectified, and the cost of rectification is, because it's expected, it's nothing so much not expected. And I have, my area of research in corporate misconduct is corporate bribery, which is bribery committed by firms in order to get business abroad, which is a common thing in many corrupt countries in the world. And what we found in our research is that the first time the allegations come out, companies on average lose about 3% of their market value in terms of their reputation. And these are all some of the papers on various other type price fixing, options backdating, contractual breaches, security breaches, and all that. Okay. Questions?
As a forensic accountant, what is like a day in your work life like? Like a normal.
When I first joined forensic accounting, a lot younger than what I am today, and we would just, I used to work in Deloitte and Touche, and we would get some of these investigations abroad. So all of us would have our passports ready in order to be able to get on a plane and go to different parts of the world. Once you get to my age, it's no longer there. So in terms of the day-to-day, when you're in an engagement, sometimes it is because we have deadlines, whether it's in court or the SEC or the DOJ wants information from us. There have been times when I worked like 3 months in a row without taking a Saturday, Sunday off. Get to the office at 8 o'clock and get back home at 10 or 11. But that is when the really crux of the thing comes about. But it's like any other day when you are not on an engagement, right? Then you take some CPE courses and all that. That time you have a better life schedule. And one of the things even in Deloitte, when we used to when somebody right out of college came into the forensic group versus somebody who went into audit, there was about a $15,000 difference in terms of starting salary, because the forensic group could recover higher rates than the audit folks. But when I say that, what helped me really in my forensic accounting career was that I was an auditor. Audit, one of the things we learn as an auditor is how does the information get recorded in the books based on the business processes within an organization, that information. So that helped me a lot in order to, when I started life.
At the beginning, you talked a lot about like the psychology of it. Did you do any research or have like a minor in psychology?
No, I don't have a minor in psychology, but I read a lot of psychology literature.
Do you think that'd be something helpful to have, like if you were going into the forensic accounting field?
We do, at certain points in time, we do have psychologists and all the teams and all that to, when they interview the folks, the lawyers will hire psychologists to come and observe if somebody is, most of us, the people I know I've worked with, they are not have psychology majors. It interests me more from an academic perspective as to why, people, if we find out what is there in their psychology, then maybe we can manipulate it in order to reduce the occurrence of cheating and fraud.
Can we ask Metro too after?
Yeah, sure. Oh.
Yes. Sure. How many years of experience do you have as a forensic accountant?
Do I have?
How many years?
Without letting you know what my age is. I have about, no, I've not worked in the last 6 years or so, but I have had, over, I should say, about 20 years.
When you're doing most of your work, are you usually working by yourself, or are you working with other people in collaboration?
Usually, for the real small jobs, like the $25,000 job, and the big firms would never work on it because it was not, the people who would not do it. But there are smaller firms, and one of the things where I know some firms which are doing really well is matrimonial disputes. Right? When there's a divorce happening and one spouse does not know where the assets, the other spouse, they hire forensic accountants. And then they have to figure out what are the other sources of income that one source is not depending on the other. And the biggest engagement that I worked on, and we had about 125 people just from Deloitte and about 50 lawyers. Yeah, actually, I led that engagement, and that was one of the reasons I left, because they expected me to be in Germany for 3 or 4 years of my life, and I was not willing to do You had your hand up?
Yeah. Do you think that like auditors tend to like not be held as accountable as they probably should be?
Huh, interesting. I have worked on cases, these audit malpractice cases, right? Because they did not follow their standards of auditing. I have worked helping those audit firms. I worked against audit firms. The two things which I am not able to figure out, or anybody else to figure out, is whether it is a lack of competency on behalf of auditors that they're not able to catch some of these frauds. It's like an elephant going past them and they're not able to recognize the elephant. Or because of the way the incentive, the auditors are incentivized, right?
Yeah.
If you're an audit partner, right, and you want to, be as a partner and make a good living, and that's the only job you have done, you tend to look the other way. So I that is something, based on psychology and all that, and I can take a class as to, what, some of these audit malpractice cases have shown. And one of the things about audit malpractice cases is, for the bigger accounting firms, even before they go for discovery, they settle because they don't want information. Imagine if somebody were to go in court and talk about the audit practices they have done. So all the big firms tend to settle right there. So we don't know a lot of information as to whether the auditors were competent or they didn't see certain things that they were supposed to see. So let me turn on to our Metro campus and see whether. Hi everyone. Hi Scott. You guys have any questions?
In your time spent in forensic accounting, do you find that there are certain trends, like maybe like over time, it tends to be more like financial fraud or like financial statement fraud, or is it more maybe like smaller frauds interspersed?
The bigger firms work on these bigger projects, right? So, I have done a lot of financial statement, restatement fraud, or financial restatements. It need not be due to fraud, because fraud is you have to prove intent. For example, many years ago, I worked on the financial restatement of Tyco, which was not, fraud related, but they had a massive restatement back in the day. And the other big ones that these big accounting firms get involved in is these bribery investigations. All over the world, you have to, a company, especially these multinational corporations, have operations in different countries, and they would be sending teams all over the world in order to go and investigate those frauds. And one of the things that the big accounting firms do not do is, after Sarbanes-Oxley, because of the independence rules, they do not provide these types of expert damages opinion and all that. And so those are provided by other firms which do not provide audit services. So, I've done most types of engagements, even bankruptcy-related engagements. In bankruptcy, there are certain things called preferential actions and fraudulent transfers and all that, which the bankruptcy trustee can bring in order to recover monies from other parties who, defrauded the bankrupt company. I've also been involved in some of those things.
What would you suggest for a student who's interested in a career in forensic accounting? What kind of path should they take to get to a career in forensic accounting?
Follow what you're doing. Get your accounting in, well, once you get skilled as an accountant, I would suggest, going and taking your CPA exam a couple of years down the road. But in the meanwhile, there are certain things that, learn some of these, computer programming and all that. The computer specialists, they make a lot of money because what happens is we have to, we are given all this information, right? and we have to find the fraudulent transfer or the fraudulent transaction. It's like a needle in the haystack. So as you prepare your, get more into your accounting career, try to learn some of these other skills as well. Computer is very important. Then the other one is also economics, economic modeling and all that, and data analytics, in order to be able to identify those outliers, and by using other means like clustering and all that to find patterns of fraud. That is something that you can also learn, and a lot of these things are available online, where you can learn some of these skills in your free time. Yeah.
So you just mentioned computer software. What are the most popular softwares that forensic companies use, or maybe auditors as well?
In terms of it's electronic discovery. We have a lot of this emails and other unstructured type of data. So there are a lot of e-discovery type of tools or applications that are there. In terms of the transactions, we could even use Excel, but Excel has a limit as to how many transactions we can do. Something like a SQL server, learning SQL and all that in order to be able to get that data, Python programming. Now these are all things that you can learn, because you need to deal with massive amounts of data in order to find it. So to be able to find that needle in the haystack, you need to know some of these programming. And personally, I've just started learning Python programming. And one of the things I would suggest about that is they have all those libraries. You don't need a lot to know computer code. You should know which library to put down for using for what data set. And it's open source, and there are a lot of things available on the web in order to learn. Okay.
Very much.
Thank you, everybody.